Hello people, welcome to the Crypto Clips YouTube channel. The US Securities and Exchange Commission has charged Nvidia stock for failing to disclose that crypto mining increased its revenue by $5.5 million. As a result, Crypto Clipper, Nvidia agreed to a cease-and-desist order, paid a $5.5 million penalty, and temporarily stopped its potentially problematic program from operating. If you want more of this content, subscribe to the Crypto Clips YouTube channel and hit the notification bell. The US Securities and Exchange Commission announced Friday that it had settled charges against technology company Nvidia Corporation for inadequate disclosures about the effects of crypto mining on its gaming business. Nvidia's earning reports, which had no mention of crypto mining, obscured the company's material revenue from sales of specialized hardware designed for crypto mining. As cryptocurrency increased in interest, gamers began to use standard Nvidia graphics card for mining this virtual currency. However, that practice prohibited GPU gaming performance and hampered sales of traditional PC games towards the end of 2017. The securities regulator explained that Nvidia was aware that their revenue increase came from crypto mining, but did not disclose it in their 10-Q forms, as required to do so. Nvidia has agreed to pay a $5.5 million fine to the United States Securities and Exchange Commission in order to settle charges of failing to disclose how many of its GPUs are being sold for cryptocurrency mining. Nvidia decided to amicably settle with the SEC given that the market is already addressing this issue due to Prime Day's success in driving GPU prices up worldwide. This spike in GPU sales has nothing to do with the current shortages of graphics cards. Instead, it's akin to the one in 2017. In 2018, Nvidia reported an increase in its GPU sales while failing to disclose that they were the result of cryptocurrency mining. The SEC alleges that Nvidia knew these sales were being driven by the relatively volatile cryptocurrency market and that Nvidia failed to disclose that information to investors, ultimately misleading them about the company's prospects for future growth. GPU prices have been declining, almost matching the level they were in December of last year. Nvidia's recent disclosure proves that this drop in GPUs has affected their other business segments, including CMP products for cryptocurrency mining. Nvidia has also made special GeForce cards for them, creating the perception that Nvidia is being more transparent about the impact cryptocurrency mining has on its overall business than it really is. For years, gamers have blamed shortages of PC graphics cards on cryptocurrency enthusiasts who have snapped up growing numbers of the devices to generate digital coins. The pandemic, together with the Trump administration's tariff on Chinese imports, has only made the situation worse. They led to skyrocketing retail and aftermarket prices. The United States Securities and Exchange Commission said that Nvidia, the graphics card company, had known that miners were eating into sales of its cards for gaming, but the company had concealed that information from investors. The SEC claimed this constituted fraud. In a cease-and-desist order on Friday, the Securities and Exchange Commission said Nvidia would pay $5.5 million to settle the allegations of inadequate disclosure, adding in a release that the company's omission of material information were misleading. Nvidia declined to comment for this story. The SEC's order marks another sign of the SEC's growing focus on virtual currencies as this week, they announced they are hiring more than 20 new staff members to investigate and prosecute crypto fraud and cybercrime. Validating the concerns, gamers have been increasingly forced to compete with the cryptocurrency industry by making coins such as Ethereum harder to generate. Kristina of the SEC Enforcement Division's Crypto Assets and Cyber Unit commented, Nvidia had disclosure failures which deprive investors of critical information to evaluate the company's business in a key market. Nvidia never denied the SEC's findings, but instead agreed to a cease-and-desist order and to pay a $5.5 million penalty. Early this week, the securities regulator announced a dramatic increase in their enforcement division, leveraging resources on crypto-related activities. The Securities and Exchange Commission commissioner criticized the chair Gary Gensler for ignoring other important actions like regulating crypto, which is a trend that is prevalent in almost every society. Nvidia has not admitted fault, although they must pay a $5.5 million penalty. The order issued says this. If you want to know why this failure to disclose might upset investors, consider 2017's cryptocurrency bubble and the aftermath of its collapse. Nvidia, which has been producing GPUs with the expectation that they would be used for crypto mining, experienced a huge burst in demand that it did not react in time to supply. The SEC complaint details the board's concerns with the unprecedented demand for Nvidia products when crypto is getting popular. As the demand for digital currency increases, some of Nvidia's sales representatives believe their product usage is being driven by crypto mining. The demand for cryptocurrency mining work cards was driving Nvidia's revenue growth, but senior executives did not recognize this until they saw the company's growing profits in gaming. Nvidia reported record revenue for the third and fourth quarters of 2018. The company's revenue was up by as much as 52% in the second quarter and 25% in the third quarter. In comparison, same periods from 2017 saw revenues increase by 6% and 26%. Nvidia's financial analysts and investors wanted to know what impact the company's gaming revenue was having due to the crypto mining, so that they regularly asked senior executives. The SEC found that increases in gaming revenue during this time were largely attributed to crypto mining. But due to Nvidia's failure to mention that the increase in sales was due to the rise of cryptocurrency mining, which wasn't properly cited in other sections of the report, it gave the misleading impression that Nvidia's gaming growth was sustainable or organic, rather than due to demand for a volatile digital currency. Failing to make timely and accurate disclosures deprived investors of important information with which to evaluate the company's business in a key market. Littman, who leads the SEC's Crypto Assets and Cyber Unit, said on Tuesday. The statement showed that all companies, including those pursuing opportunities involving emerging technology, must take effective disclosures to investors. Nvidia misled investors by not giving clear financial details on the company's revenue. In the gaming business, Nvidia reported revenue growth, but deliberately withheld information on its crypto revenue. This lack of transparency made investors question if investing in the company was a profitable move, and was also a red flag because Nvidia acknowledged the financial success from cryptocurrencies in other aspects of its business. Since the increased difficulty in mining some of the most popular cryptocurrencies had led to many people questioning their long-term viability, we're seeing more and more those move away from mining, which will reduce our carbon footprint and make it easier for gamers. Best Buy offers a variety of Nvidia graphics cards, with prices normalizing recently. Though the company recently paid a settlement and is not making claims, it agrees to not repeat what was done before. In 2018, the company did not disclose that demand from crypto mining was a significant part of the rising graphics processing unit sales. They simply stated that they were growing. Cryptocurrency mining is the process of verifying transactions on a distributed ledger, and GPU is the acronym for Graphical Processing Unit, high-powered processors utilized in graphics pipeline. In order to maintain compliance, companies that handle emerging technologies must ensure that their disclosures are timely, complete, and accurate. This is stated by the head of the SEC's crypto enforcement team, Kristina Littman. Nvidia did not comment. The company, which is based in California, agreed to the penalty without admitting or denying the regulator's findings. The SEC says Nvidia vaguely stated that its business would be negatively affected by cryptocurrencies, but failed to mention the skyrocketing demand for graphics cards from crypto miners. Customers may purchase the firm's powerful processors due to wanting to mine cryptocurrencies such as Ethereum and Bitcoin, which is difficult to tell what they are purchased for. The firm's high-performing processors are suited for this task. The stories you want to hear about are our specialty. From developments in the US political scene, Canada's multiculturalism, and South America's geopolitical rise. Demand for graphics chips led to a run-up in 2017, but that windfall was short-lived, and the following year, the company slashed their sales forecast below analyst estimates. The disappointment caused investors to dump the stock, resulting in a 20% decline over 2 trading days. To better address the volatility, Nvidia will be offering chips designed specifically for crypto mining. They will also be making it more difficult to use GPUs for that task. On Monday, May 25th, expansion into the crypto industry will be further explored when Nvidia releases its quarterly earnings report. SEC says a company, Nvidia, failed to disclose that the company's generated revenue from the sale of its gaming graphics processing units during the first quarter of 2018 by mining cryptocurrency, according to SEC. In its 10-Q forms, Nvidia stated sales were growing based on material changes in their business. However, they also omitted crypto mining as a contributing factor. Nvidia recently filed a complaint, alleging that certain crypto asset prices rose in Q2 and Q3 of 2018, and users of Nvidia's GPUs were increasingly performing crypto mining. According to the commission, the company's actions violated parts of the Securities Act of 1933 and provisions in the Securities Exchange Act of 1934. The SEC's Office of Chief Enforcement Officer released a statement on the importance of complying with disclosure requirements. It states that in order to avoid discovery and penalties, companies need to be sure that they are meeting all necessary obligations. An Nvidia spokesperson declined to comment on the matter with Tom's Hardware. In accordance to the SEC, Nvidia is paying a $5.5 million fine and will neither admit nor deny engaging in any wrongdoing. That fine of $1 billion is a slap to the wrist for Nvidia, which in 2018 made $9.8 billion in revenue and a $3 billion in profit. In 2021, the company made $26 billion in revenue and approximately $9.7 billion in profit. Due to a pandemic and other production issues, Nvidia's GPU stock was too low and there was demand for gaming PCs. Scam artists bought up graphic cards to resell them at a high price so that they can make a profit as well. Presently, Nvidia has converted some of its Turing silicon to the CMP product line that is specifically designed for cryptocurrency mining. In recent months, graphic cards from both Nvidia and AMD have been returning to their manufacturer's suggested retail price, meaning that increasing numbers of people are buying graphics card in order to play video games. The U.S. Securities and Exchange Commission announced charges and a settlement with Nvidia today. The agency claims the company misled liability by over-reporting revenue related to gaming while hiding how much of its success ultimately relied on the volatile cryptocurrency market. Nvidia agrees to not violate SEC disclosure requirements. Nvidia was ordered to pay fines after misreporting the number of gaming GPUs going to miners in their financial reports. The SEC discovered that Nvidia inflated the number by claiming Ethereum mining was increasing significantly. Nvidia saw this as an opportunity to sell more GPUs to gamers, but realized it needed mining customers as well. The crazy growth and demonization of cryptocurrency, Nvidia was difficult to read. Investors didn't know how mining affected gaming revenue and the balance of risk between potential future growth and short-term profit opportunities. The SEC alleges that Nvidia's senior management in this error, with their analysts and investors allegedly asking many questions about when gaming revenue would recover after crypto mining rendered it too risky to make decisions on its long-term prospects as they supported Activision's SEC filing. Despite Nvidia not mentioning mining as an influence in its gaming division, who has just posted impressive sales numbers, things have turned out to be very difficult. In late 2018, a crypto crash and the weakening of the Chinese market led Nvidia down a similar path. This called for sharp reductions in earnings projections of $500 million and spurred a suit by shareholders. Littman says Nvidia permissively withheld material information from its investors that they needed to understand their company's business in a key market. Cryptocurrencies are considered very volatile, and it was discovered earlier this week that the company did not disclose future risks to investors in 2018. Nvidia's disclosure failures deprived investors of critical information to evaluate the company's business in a key market, says Kristina Littman, chief of the SEC Enforcement Division's Crypto Assets and Cyber Unit. While Nvidia denied the SEC's findings in its filing, the company agreed to a cease-and-desist order. Nvidia did not accept or deny the SEC's findings and opted not to provide a comment on Friday. Cryptocurrency miners are getting compensated for verifying transactions at a rapid pace. As the frenzy of cryptocurrency grows in 2017, Nvidia's graphics processing units that were designed and marketed as PC gaming hardware have become increasingly popular among cryptocurrency miners, according to SEC filings. The company did not disclose crypto mining revenues in its regulatory filings, even though it knew that the gaming business was largely driven by crypto mining in its financial report for 2018. The SEC states in their recent report that there was a significant lack of historical data for companies to assess and predict the next few years. This can make it difficult for investors as past performance is not indicative of future performance, making stock prices difficult to predict. Cryptocurrency is a volatile market. Bitcoin has seen some volatility but still maintains its price at around $365,000. Price for Bitcoin dropped by April 23rd to around $36,000 and then again on April 27th at around $36,000. The U.S. Securities and Exchange Commission charged Nvidia after the company failed to disclose that cryptocurrency was negatively impacting its gaming business. Nvidia, the company in question, agreed to stop hiding the revenue that comes from the volatile crypto market. It was also required to admit any wrongdoing. However, Nvidia has not admitted to any wrongdoing as part of the settlement, but agreed to stop any unlawful failures to disclose information. The SEC has charged Nvidia for deceptive practices for the company's financial reports about its 2018 fiscal year. Nvidia saw an explosion in sales from crypto mining during 2017, where the profits of Ethereum skyrocketed. However, gaming GPUs were still being sold to miners, which affected memory scarcity and cost for gamers. The SEC says that employees acknowledged this as true but tried to downplay it in meetings with executives. That's it for this video, Crypto Clipper. Remember to subscribe to our channel, and if you feel like we've delivered value, please share this video with one person. That's right, just one person as a token of your appreciation for the hard work we put into making content that educates and helps you on your mission of building your own fortune. Remember, you can watch video after video, but it isn't until you actually take action that you'll start to see results. See you soon!